Now, Frankfurt fails to break our phase one level, so the end of our level, and adds to the inducement as well. So that's what's
Yeah.
really important about time and price is that London is much more volatile. So even though Frankfurt can sometimes mitigate it, in this case it didn't because it didn't have enough volatility. So that's where we have to sit on our hands and wait for the right time. So in this case, we had London second set of magic minute mitigations here, where we mitigated our demand. We mitigated that vector level, created that inducement, and then we had a very nice buy. And from there, we just continued up in New York. But that's the importance of waiting. Also, what I should have labeled, what's happening here? Well, this white space, because these are all shaded for their session times, it's a white space here, and that's pre-New York. And like I said, pre-New York is a pre-setup for New York. So what happened during pre-New York here is that it created that phase two inducement from our vector level. It created that inducement to get swept and then reverse. So it's very important that we focus exactly on what's happening during our session times. Okay?
Okay.
So specifically on session times here, and a bit of another example, we have a nice order block here that formed in Asia. So we have our kind of our break and retest example. Here we create inducement, we sweep into it at London Open, not at Frankfurt. Frankfurt adds to that inducement. So these dots are essentially when I'll look for trades. See how I don't have everything filled out? Because I'm not looking to trade it every time. I'm not going to sit on my computer and wait for a trade all day because that would be inefficient, okay? I could be doing other things. So essentially here, I'll look for a London Open trade if there's an opportunity, and there is a very nice opportunity, specifically here, 30 minutes after the open. Then we also have London Magic minutes, which mitigations, which mitigate, like we went through, that mitigate our London Open. This can happen an hour and a half or so to 2 hours after that open. So trade one, trade two, New York Open, a potential sell from here, but I'll look to trade New York Open only sometimes. I prefer my New York Triple M Magic Minute mitigations because they're the ones that create that real move that mitigate this order block here. But that New York Open usually creates a sweep of liquidity, then that push to the downside, and then we reverse for our trap time, about an hour later. So these are the times I look to trade at, and I will change these for you in Eastern time. Okay, make it easy for you. Awesome. So our next little subtopic is the daily cycle and momentum. So momentum isn't taught because people don't know how to teach it, and it's true because if you look at the market, in a sense, let's go on a higher time frame because higher time frame is easier to understand. Well, we're moving up here, and we continue moving up. It's our bias to keep moving up, and that's why we move up for days and days. 1, 2, 3, 4, 5, 6. We have a bias within these days to move up, and it's very hard to I can't find the word, but it's very hard to actually put into the technique of how to trade because it's more of a thought idea. It's more of a thought process that okay, because we're moving up, we have bias to move up. But what we can do and what's outlined in the ebook, which might be a little bit hard to understand, but what's outlined in the ebook is that we can use our incoming daily momentum. So let's go back a little bit in time, maybe to here. Okay, go into the 15 minutes. So first thing we want to do with the daily cycle is we want to find our directional momentum. So zoom out and basically just trace what price is doing. Price is going like this, going down a bit, and then it's looking up, right? Because we have these moves up. We have this bias that price has a force, like an essential force to keep moving up. So what we'll want to be doing say here before the day starts, because this is Asia, before my day starts specifically, is I will get this tool and I will just draw an arrow, something like this. What this arrow is going to tell me is that we have a bias to move up like this, momentum-wise, because that's our momentum. Our momentum's to move up. To break momentum, right, you have to, if you're moving up, to break momentum, you have to curve momentum down, okay? But if you're moving up, oh, that was a bit shitty. If you're moving up, right, the momentum remains up. So it's very easy to trade from zones with a bias, okay? But as a reversal from an up move, you need that momentum shift, okay? So utilizing momentum tells us that essentially it's easier for price to move in a certain direction. So the whole market's based on momentum, and it kind of creates a fairness to directional bias, okay?
Okay.
So that idea of respect the trend is a very correct idea because of momentum. So trading with the trend is a very good tactic, and people are very profitable even if they don't have a good strategy, because essentially they're just following momentum, okay? But it's very important to look on the left, because if you're in a low time frame, you might get stuck by entering a higher time frame, like supply zone or something like that, in which your momentum, lower time frame momentum will diminish, because like I said here, high time frame momentum is a king over lower time frame momentum.
Okay. So how do you recognize the higher time frame momentum again?
Yeah, it's just about going on higher time frame. Okay, so so let's piece something out here. Well, where's this tool? Here we have a low, we have a high, we have a low, we have a high. So we're moving like this: high highs, high lows. Very nice and simple market structure here. We're having a break, and then we're liquidating lows and continue moving up. Okay. So essentially, in this case here, well, if we go on a lower time frame, we're going to see that our momentum is down. So we'll have a look at that in a sec. But looking here, we're seeing that demand is here, and we're respecting demand, and moving up. Here we have a 4-hour shift. But essentially, on the 4-hour, like you can see, our momentum is up. In this case, it's up. So let's zoom up to a lower time frame. Now when we're here, even though our high time frame momentum is up, it's down, isn't it? Because essentially we had this big move down, and then so today we respected our bias of moving down. And then we had inducement, etc. And you can trade that because we have our bias of moving down. But what happens here is that shift, and then people are like, well, we're moving down. That's because the higher time frame predicted that we're going to keep moving up. So that's why higher time frame is so important with momentum and structure, because it really determines where we have those movement shifts. Asia grabbed high volume orders, and then we could have, yeah.
So what you calling the momentum? You calling the shifts or the momentum?
What was that, sorry?
What are you calling the momentum? Is it the shifts? How do I annotate
Yeah,
this?
it's a good way to think of it. Momentum is, yeah, it is structural movement, and it is predictive of what price is going to do, like what price is going to do next, yeah. But it's also utilizing the force of the market's movements. Okay, so here we had a strong push up, so we had this creation of force that pushes up. So now what happens is price rebalances and reutilizes that strong force to push up, and then push up again, and then creates an even bigger move. So it puts you on the right side of the market, finds where you're actually inducing rather than having internal breaker structures where you're inducing, so accumulating, and puts a bias on how you should be buying or selling. So yeah, just like in this case, we had a big sweep, big push, big 1 hour market structure shift, okay, because we broke that vector level. And then we had continuations up because we had this big movement here, huge upwards movement. So we want to respect when we see things like that. Okay, does that make a bit more sense?
Yeah.
Okay, let's go over the why. Okay, and it does take some time to grasp momentum because it's something your eye kind of sees over time, and it's not something you can just really explain. It's something you have to just practice and practice. But yeah, like I said, it essentially predicts your day and creates that bias for you. So why does it happen? It's because we have a fractional nature, because we have fractional nature movements through time frames. Okay, and like I said, the higher time frame determines what will happen on the lower time frame. Think of it as having a weight on movement of where price is trying to target. Give you an example. If we have a daily buy target, okay, so like if we're looking for buys, okay, we have a daily buy target, and we're not encountering strong supply zones, so strong sell zones on the way up, price has a bias to move to that target with strong buying power, okay, and weak selling power. So if we zoom in on a lower time frame, we will see that price is making strong buy inducement moves with little opposing force. So we're in the direction of the manipulation, okay? Hence target-based momentum. If we reach our target, which is our reversal zone, which should always be our target, our inducement level for our zone, potential reversal zone, and we mitigate our leg efficiently, we run our already mitigated efficient price action. Okay, let's look at an example. Okay, it is a diagram from the ebook, but it is a very nice example. So what's happening here? Price is moving bearish. We're moving down. We have lower lows, lower highs. Okay, so we have this momentum coming in. We can evaluate this momentum, not direction particularly. Direction's a bit different to momentum. But essentially we have that downwards force telling us that today we're going to essentially respect that downwards force more than we're going to respect upwards force. Does that make sense?
Yeah.
Yeah. So once we come into this day, this is Asia, okay? So this is a day. Think of it as just a day. Asia, what happens is we have so much selling money where we want to mark out our supply zones. Once we induce a supply zone, which is where Asia adds to the phase one, so that's a number one setup. Frankfurt Open, this was from a real example. So I'm not just making this up, but this is from an actual real example. Frankfurt Open takes that phase one inducement, creates the change of character, which is also market structure shift because it broke our vector level in this case. And then it created phase two inducement to mitigate this manipulation up here. So we had the London Open sell, then we had a Magic Minutes mitigation from this sell. And we know that our sells are, we can be more confident about selling because of our momentum, okay? And even New York, we had so much momentum because we have a very downwards angle here that we even had a very good sell during New York. Okay, a bit dangerous to do it with such a displacement, but if the setup sets itself up, creates inducement, creates our valid three rules, and works, it works. Okay. Another one more from the ebook itself: opposing momentum. What does opposing momentum mean? It means that we don't have for the day especially, we don't have a bias in momentum. Why? Because we created a big low and a big high, and we encapsulate ourselves into that. So this is what I went over in the start, actually. Very similar thing that occurred at the start. But it's saying that momentum becomes essentially equalized. like opposing forces kind of thing within its
Oh,
range. Yeah. So that's why ranges are very good to sell and buy from, because we don't have a bias on momentum. So very powerful stuff with ping pong trading. If you find a range, you can do a lot with it. Okay. So in
you
this
got
case,
you
Asia.
can teach me how to define ranges, how to walk, how to trade within ranges.
Well, when we finish this, I'll stop the recording and we'll talk through a bit more, and we'll write a list of stuff that you want to go over, and we can do that in a private lesson. Yeah.
Okay,
Awesome.
okay.
Awesome. So in this case, Asia acted as phase one inducement for sells and for buys. Okay, we have buy side liquidity up here and sell side liquidity down here. So very important to see what Asia's doing, and it's a tick for me because I'm seeing that it's encapsulated within inducement ranges for supply and demand. Okay, Frankfurt opens, but it doesn't break our inducement level for our order block, nor does London. But we come into London magic minute mitigations, where we sweep our inducement, mitigate our order block, create our chalk or our shift, however we do our low time frame trade, and then we can buy from there. But I should have put the targets to this phase one level. That's my bad. You should always
Why?
do that because
Why?
because if you're an institution, okay, your goal is to take out inducement. That's it. Your goal is to take out inducement. It's not to mitigate zones. It is, in a sense, to grab that money, and it's a natural process that happens to grab and mitigate that money. But you want to take profit where the institutions are taking profit, and that's at the end of the mitigation inducement cycles. Okay, so I should have done it to there. Something we can also go over a little bit and back test. But here we actually encounter inducement pullback. We grab into here, we push up, and we have 3 nice trades. But we have a supply zone with inducement now that formed from all this. So now we got to respect sells, okay? Because remember, we don't have a momentum bias. So sells now, we tap into our order block, sweep our inducement, grab our vector level, break, however we do our low time frame thing, which we won't go over now. And then we get sells during New York. So we take advantage of buys and sells in the same day by understanding momentum and really what's happening in the market. Okay, so let's apply it to a live example real quick. Okay, so let's find where we have a clear momentum. So let's say this day we have a very clear momentum. Okay, we're pushing up. Yeah, we have a clear upwards momentum. We have a trade target to here for the day. Why do we have our trade target to here for the day? Because this is our next supply zone, and this is the end of our mitigation cycle. Okay. Why is it the end of our mitigation cycle? Because this is where we encounter the imbalance, and this is the end of where we mitigated oil inducement for this level. Okay. Doesn't mean if we have inducement for a level that we're going to reverse. In this case, we didn't reverse at all. We actually just went down, continued. Of course, that happens all the time, but will be something I have to go over another time. But regardless of that, let's say we're here during the day. I'll zoom in. We'll go into the 5 minute. Okay, so Asia's here. Okay. Now we got to analyze what Asia's doing. So Asia highs.
It building up. So it's a build up of mitigation.
Yeah, exactly. So that's what Asia did there. It built up mitigations, and then we had
London continue with the build. London continue like to
continuation of Asia. Exactly. Yeah. So we had an order block within Asia here because we have some unmitigated space here. And then, like you said, we built up during Asia. Exactly. So we find the start of that build up, which is in turn, it's our mitigation cycle. Okay. So perfect, because we have a bias on moving up, right? We want to respect buys more than sells. Doesn't always mean we can't sell as well. But in this case, I'm not seeing any good sell opportunities so far. But as soon as we break that, we can do our lower time frame entry. Trade at the very end of London's second magic minute mitigations, and then we can trade to our target, which can be our mitigation cycle here. This is a safer one to do, so I'd definitely just do that. But cool, we have our London trade using our momentum bias, okay? Also important to note that there's no gaps here, telling me that everything, all the buying money has been efficient from this point here. Efficient price action from this point here, because there's no gaps, there's no inefficiency, yeah? So we're carrying that money to this point, yeah?
Okay.
Even down here, there's no inefficiency. It's all been filled, So essentially, this money is all the way up here. That's a good way to look at it. This money is all the way transferred all the way up here. So we want to respect those buyers, we want to respect that momentum, okay? Now from there, we have our trade. We need to go on the 1 minute, but if I go on the 1 minute, trading view will reset my chart, so I won't bother doing that. Now for New York, okay, we have a New York open trade. Usually 30 minutes into New York's the best way to do it. What are we seeing? I'm seeing an inducement level here that got respected. I'm seeing nice order block. Oh, wrong tool. I'm seeing a nice order block here. So I'm seeing another trade using the bias of momentum for buys, totaling 23R and like 25R just by using my bias, okay? Also important to note that this is all efficient price action here, so we won't get a pullback during our move up, yeah? So that can act as our build up for our buys. But yeah, perfect. That's a great example of how we can use momentum within the daily cycle. Cool. Now the weekly cycle is something I don't really utilize like day in and day out. It's more of a back of the mind idea for me. The weekly cycle kind of just says that Monday and often Tuesday act as like the fake move of the week to prepare for Wednesday and Thursday. Now Friday will either continue from Wednesday or Thursday or create a reversal in Monday and Tuesday direction. But that's kind of all you really need to understand is that Wednesday and Thursday, those main moves of the week, and Monday and Tuesday usually create a build up for those Wednesday and Thursday main moves. Okay.
So Wednesday, Thursday is a reversal day, or is it Friday?
Yeah. So Monday and Tuesday act as that build up. You can think of it. Wednesday and Thursday. Well, Wednesday usually, not always. Okay, it's got some exceptions. Like Tuesday could be, but you just got to spot it on the chart. But in this case, Wednesday acts as a reversal, and then Thursday is a continuation from that reversal. And then Friday can either go up or down. Like Friday's a bit more unpredictable, but you just got to follow what your order blocks are doing and where your high volume money is in the market. So let's recap, okay? So first, you want to find the incoming momentum. Let's see if I can copy this. I can. Cool. So we'll just straight up back test
it. Okay. There's something I need to tell you. The last remember the last stuff that you put it in this Google stuff like, and it wasn't like opening on my thing. So I don't know if you could put it in a PDF like how you put the ebook. The last
Oh, you mean this board?
Yeah, the last one you did, right? It was very hard for me to navigate and open and stuff like that. So if you could put more in a PDF form like the ebook, that would be good, man.
Yeah, of course. I'll try to do that for you. No problem.
The last one, it wasn't. So I will appreciate if you put the last one and this one in a PDF form. Yeah.
Okay, sure. I'll try to do that for you. No problem.
Yeah, bro.
Awesome. So let's recap our idea of how we've tackled the daily cycle for today. Let's go to an area with clear momentum. Okay, let's look here because specifically you like to trade. You said you like to trade London, so we'll have a look at what happens today.
And also AU is my pair I trade. I don't trade EU or GU, but AU is my pair. So
Oh, so
I'm like,
we guessed that well today. We guessed it well.
because AU is definitely AU and sometimes NU, New Zealand, but the two, both of them mostly correlate, but AU,
Yeah.
yeah.
Okay. No, yeah, AU is good. I like AU a lot, and I'm from Australia, so it's a bit like that.
When Australia,
Where in Australia?
yeah.
Melbourne, Victoria.
Oh, Melbourne, okay.
Yeah. So let's recap this. Let's go through it. So, uh, let's do it together. Essentially, we want to find the incoming momentum based on the 15-minute. While we're looking to trade today, I'll just create our. We're looking to trade London today, so I'll create kind of a border for that. Incoming momentum. Well, we had a big seller from here, so I'd say our incoming momentum is something like this. Would you agree with me?
Yes.
Yeah, awesome. Cool. So our incoming momentum, we found that based on the 15. We're on the 5 here, but if we zoom out a bit more, we can essentially find the same thing. Next, we want to draw out the valid zones and link the high volume orders. Okay. So how do we link high volume orders? Well, we got a bias on sells, so we want to do sells first. We had a break here, which you know, also important to note that it's swept. So we had a manipulation. We moved it all down efficiently. Okay. And keep marking out our breaks. We had a break here, and we had a nice break here, and then we had a push off. Then I'm seeing some imbalance in here and here, so some detachment. Now, for our order blocks to be valid, we need imbalance, inducement, impulsion. Well, we have imbalance here. I am not marking out this one because this is already mitigated, okay, to here. We can't use already mitigated order blocks, okay? So instead, let's find the top of where that mitigation started. We have our zone. We can mark out, we have imbalance in here, like that. Let's pull that out. See how we're respecting our mitigation? It means we're building upon more orders, okay? Yeah, I will just grab all that like that because that's all valid as long as the inducement's being taken out. Now buys, what am I seeing for buys if I zoom out? Oh, I'm seeing little order block here, okay, because it's got that imbalance, impulsion, and inducement. But we've already, this is the start of that cycle of inducement, but we've already mitigated that in Asia, okay? So our next demand zone is nowhere to be found. Why? Because this is all efficient price action. This mitigated this, which mitigated this, which mitigated this to equal lows. So this is a very, very nice first target for sells. Anyway, back to where we are now, momentum. We found our valid order blocks. Now let's see what happens. Link the dots with a high volume order flow. So our selling money started here. No imbalances, so we filled it all up. Detachment. So essentially we have a lot of resting orders at this point here. So it follows our order block rules, which is really good. Analyze control and momentum. Well, yeah, our control, we're controlling supply. Our supply is in control at the moment. Yeah, especially because we don't have demands here in which we can mitigate. Follow time and price. Well, we're trading London, and we can see London Open has given us a very nice sell opportunity, which we've already seen here. Utilize our low time frame entry. We have our order block. We have our mitigation. Maybe I can go on the 2 minute. Maybe. Yes, I can. So not a clear phase 2 here, but that's okay. Yeah, that's okay. We can see there's an inducement pullback on a higher time frame. We can put in our trade from our zone to our target, just like that. Press play. See it take profit. There we go. Cool. So that's a cool example of how we can use momentum within the daily cycle. But as a whole, utilizing the daily cycle with time and price. But yeah, man, that's it. That's it for today. I'll send you the board. I'll just stop the recording now. But yeah, thanks for tuning in.
Yeah, I saw you had 90-minute cycle or something like that.